Looking at the time, I always have a very difficult time with an audience like this because it is both investors and companies. So I'll try and leave a few minutes for questions, should you have any at the end of my talk. To start off, I think the message that I'm going to share with you is Canada is a very, very good place for tech, especially small tech investment. We have an incredible ecosystem, which I'll bring along as we go through the slides. To start, shameless plug for my company. I work for CIBC, which is one of Canada's big banks. We have oops, excuse me. We're very large, and Canada is unique in the world. It's actually quite similar to Australia, to be honest, where we have a oligopoly of banks. So what we say is, if you're going to do something in Canada, you should call one of the banks. You should have one of the big Canadian banks involved in your transaction because we will actually have insight that's unique that no other bank can bring to that market. CIBC has offices around the world, primarily in Canada and the U.S., some offices in Europe, and actually we'll be adding one in Luxembourg very soon due to Brexit. And I think that's quite important for several reasons around tech, because there is a bit of a tech hub as well as a space tech hub, and then offices in Asia, Beijing, Shanghai, Tokyo, Hong Kong, Singapore, focusing on technology innovation, consumer health, which more and more of my practice includes health tech, private capital, which I will get into as well. But that's a very important point because Canada has very, very strong pension funds, very, very strong private capital groups, which are increasingly looking to invest outside of Canada, also in tech. So companies like CPPIB, Canadian Pension Plan, that have an office here in Hong Kong, are very active looking at tech opportunities globally. We do have a commitment to technology and innovation. We were the first bank to have an Apple Watch app. We have full service banking on CIBC's app, but and we do have a very collaborative culture with some of the more famous names: MIT, Apple, Facebook, etc. We've worked with all of them, but probably what's most important to this group and what's most important to the tech landscape is last year we bought, a year and a half ago, we bought a bank called we bought a bank called Wellington Financial, and Wellington Financial is basically Canada's Silicon Valley Bank. So we do venture debt, significant amounts of venture debt. So you've got a Canadian bank with a strong credit rating that's willing to lend to venture tech companies. And I think that's a very, very strong differentiator for my bank and a very interesting reason to think about Canada as an opportunity. So I'm gonna finish it off the shameless plug here. We're a very strong tech IPO underwriter. We're very strong. We have a very strong innovation platform, and we do have this venture debt offering, which is important to incubate some of these small companies. So the Canadian tech landscape, and again, talking to a group like this, I find it very difficult. So I've focused kind of on where the market is, but there's all kinds of things we can talk about in terms of the tech landscape. Starting off, tech is a bifurcated market, especially in Canada. We have emerging names and we have known unicorns, and both we're able to bank, and both have a place. What I'm seeing in the Canadian landscape is we don't really have that mid-tier of company. It's either all or nothing. And unlike its neighbor, unlike the U.S., Canada doesn't produce a significant number of high-quality public technology companies that are growing rapidly and scaling globally. We do have some, but quite often they get snapped up. So as a company owner, as a founder, Canada is actually a great place because it's a good quality of standard of living, and people are regularly combing through Canadian tech to buy it and bring it into the fold in Silicon Valley. Our tech sector is in good shape, and the weighting on the TSX Infotech for our index has actually gone up to 4.5%. So historically, Canada has been a bank and a natural resource index, and we're seeing tech get bigger and bigger and bigger. And despite slowdown in unicorn formation, there are some emerging. And as an investor, putting an investor hat on, there's lots of opportunity to buy essentially what I would call world-class companies that are much cheaper than in the U.S. A few things on how we help and where the market is. We're starting to see a lot of disruption, which is generally a global trend. What I would say is when you think about the U.S. U.S. tech, Western tech, Canada's the same, but same quality, same pace of development, same scalability, but actually because of the dollar and because of there's less of a global spotlight on it, it's cheaper. So we get this traditional disrupted sectors as well: financial services, healthcare, agriculture, supply chain management, and renewable energy. And I think within agriculture and renewable energy, we actually have an advantage because those are two of our historically very, very strong sectors that we are able to focus on and kind of bring along in tech. Within the emerging industries, Canada has actually become very strong in AI. We are a very, very strong AI company with a lot of support from the government, and a lot of companies are starting to come up. Autonomous vehicles, cybersecurity, advanced robotics, and smart cities. And what's really interesting, and I continue to compare the Canadian tech landscape to the American tech landscape, and I think it's a very accurate comparison. We're just smaller. And we're also a backdoor into the US, which is very important. You see a lot of large companies, Facebook, WhatsApp, testing their tech in Canada because we are essentially the same kind of consumer population, but we're 10% of that consumer population. So if it works in Canada, odds are it will work in the US. So in terms of, with an investor hat, Infotech has outperformed the composite, the TSX composite, our main index, by 20% this year, with the big winners being Shopify, Descartes, CGI, and Constellation Software. And so the yellow bar here shows where this, how well tech is done versus the rest of the index, remembering that the rest of the index is primarily resources companies and banks. However, versus the comp since 1990, tech has also been doing very, very well, and it's a great place to invest. Like I said, it's generally cheaper than the U.S. for the same quality, and I'll get into that very shortly. Just the returns, and really I'll probably skip over this. I think Shopify is Canada's big global news story, global winner, and you see Shopify powering small and medium enterprise shops around the world, from Africa to Tokyo to Canada, and to a certain extent in the U.S. as well. So that's one of the big drivers that we have. That's one of Canada's big unicorns, and that's one of the companies that has stayed in Canada. One of the interesting things about Shopify is it's based in Ottawa, and Canada. One of the blessings and curses of Canada is it's obviously very geographically diverse, but all of the big major cities and some of the smaller cities like Ottawa have a burgeoning tech sector. So you get a very, very strong, as a founder, as a company, you get a very strong standard of living. So geographical effect, Canada versus U.S. There are a lot fewer companies. I think I've probably harped on this a little too much across the technology subsectors. But what's really interesting is that leads to scarcity premium. And we're seeing that regularly, and that's not just in tech, but it is very pronounced in tech. So on a case-by-case basis, and generally, but I had to be very careful in my wording here, some Canadian technologies names have outperformed peers and are receiving a premium valuation. That's because there's less opportunity for investors to invest into strong tech names in Canada. So versus the FANGs, I just use Shopify as an example. The margins the multiples are much better than the FANGs, or versus the BVP index, which is 50 global tech companies trading on NASDAQ. So when you're thinking as a founder, when you're looking at Canada, the Canadian Stock Exchange, quite often you can receive a premium valuation because there's not the same opportunity for investors to buy quality tech. So in general, Canadian tech sector, and again, I'll leave some time for questions. It's continuing to grow, but it's slow and steady, which I kind of look at a little bit like Canadians themselves. Canadians continue to have a cost advantage, but that's not due to geographical discount. The cost of living and currency are important to think about when you're looking at Canadian tech in general. Ownership, and importantly, leveraging and monetizing big data is a key theme. This is no different from the U.S., no different from tech companies globally. Many companies in Canada have incorporated further investing in machine learning and AI capabilities. That's not going to stop. And in fact, I would argue that Canada is a world leader in AI capabilities through our education, promoting STEM in our education system, or just the companies that are already inherent in the landscape. And we are seeing a significant number of emerging tech companies, which will present strong investment opportunities to those willing to look. And when I say those willing to look, we're seeing a lot of American PE coming up to Canada just to look at the tech sector. They think Silicon Valley is too expensive, and they think Canada is an underexplored gem of emerging tech companies, and we're starting to see people, more and more Americans, more and more Asians even, come into Canada. Just as a small anecdote, I walked into a venture capital fund in Shenzhen about a year ago, and this venture capital fund controls $60 billion US of venture capital money. And I said, have you thought about Canada at all? And they said, oh, it's interesting you say that. We're opening an office in Vancouver next week. So people are starting to think about it, but there's still a lot of bargains to be had. So depending on what hat you're wearing, I think is a great opportunity, but it's a great opportunity for different reasons. So that's generally the Canadian tech sector. I didn't want to get too much into that because Michael kindly let me talk about what is one of my favorite and personal focuses in tech, which is space resources. And just a very quick about me. Historically I've been an oil and gas banker, a natural resources banker, but coming out here to Asia and seeing the opportunity, I quickly pivoted into tech. So now I cover both sectors. And in order to become smarter, to take classes in machine learning, et cetera, I signed up for a master's from a reputable university in space resources. So from the Colorado School of Mines, I'm studying basically space tech, and I absolutely love it. So I talk about it as much as I can. It's the first program focused on educating science engineers, policymakers, et cetera, in space resources. And what this has given me is an opportunity to take class in machine learning, bring my knowledge up to speed so I can actually be an appropriate tech banker. So a little plug for the program. It's an incredibly fun journey, and it's actually opened my eyes to something I didn't know, which I'm sharing with you now. The space resources market is huge. Most people don't know this. It's $335 billion as of last year, but everybody is involved. And again, people don't really think about space resources, but it touches your lives every day, even down to if you go to the grocery store, all your food is now grown using satellite technology. That is all falling into the space resources industry. So, the regular names, Amazon, Google, Boeing, et cetera, but you even have right down to the large farms in the US or in China. It's a rapidly growing market. We have US military spending $600 billion per year on space, NASA spending $20 billion, but what's happening is the private sector is getting into this. So we see by 2040, and this is not just me, this is Morgan Stanley and several other large banks, the space industry being $1.1 trillion by 2040, which is a 5% CAGR. And what really, really struck me to look at this industry is the number of people who are involved in it. So you've got Inmarsat, SoftBank, all the big names, but every well-known billionaire, including our own homegrown Li Ka-shing, has an investment in space resources. And the near-term market, for those of you looking to be involved in it, is actually data. It's the same thing as Canadian tech, it's the same thing as US tech, it's the same thing as Chinese and Asian tech, data. So I put this in because when I first saw this chart, it blew my mind. The global data for autonomous cars is 250 times the global IP data traffic in 2015. Absolutely blows my mind. That means there's a lot of money to be made. The market is just going to go insane. Space tech is globally relevant. These are the operational satellites going from 2005 to 2014 in the small bubbles, and then in 2015 to 2024, and you're seeing them globally. Some of the bigger markets, as you're seeing, is the Middle East, Latin America, and North America. The satellites are doubling, and I think that's a reflection of the adoption of Internet of Things and data being required. And it's a pervasive impact globally. So as all these things we're talking about, including health tech, et cetera, those new technologies are quite often developed in space or developed for reason of space, satellite communication, Earth observation, which then falls into public demand and can be brought into a wider audience. We're seeing VC money and angel money rapidly entering the system. The VC is this light bar here, and from 2000 it's very, very, very small. 2013, 2014, 2015, which is the last data I could get, we're just seeing a massive amount of investment into the industry, far more than we're seeing in other tech-related industries. And the economy is developing rapidly. So there's a general theme here that this is a space that's underappreciated by the global investor, but the smart money is starting to get in quite quickly. So again, talking a little bit of plug for my program, because I think anybody's interested in it, it's very easy to do from Hong Kong or an Asian time zone. But I also love Bill Nye. So an investment in space stimulates society, it stimulates it economically, and it stimulates us intellectually, and it gives us all passion. So on that note, either Canada or Canadian tech landscape or space tech, I'd be very happy to answer questions for about 2 or 3 minutes. But if there aren't any, that's okay too. I don't think so. Great. Thank you very much, everybody.